The real fight is not controlling the rent. The real fight is controlling the value of the money. Because if you've got that controlled, you don't have those issues with rent, nor do you have issues with your income.
Lynette Zang, a renowned financial analyst with over 40 years of experience in banking, investment strategy, and monetary history, issued a stark warning amid easing trade tensions between the United States and China. Chief Market Analyst at ITM Trading, Zang is known for her expertise in wealth preservation through physical precious metals. In a recent tweet, she cautioned investors against being swayed by current geopolitical fluctuations. Despite prevailing optimism surrounding tariffs, demand for safe haven assets remains strong. Gold and silver prices are holding near multi-year highs, driven by concerns about inflation, monetary policy shifts, and rising global debt. The Silver Institute has recorded a 16% increase in demand for industrial silver by the first quarter of 2025, primarily due to increased production of solar panels and electric vehicles. Meanwhile, central banks continued their gold purchases in the second quarter, extending a record trend that began in 2022. Zhang has long warned about the vulnerabilities of fiat-based financial systems. Her approach prioritizes preserving long-term purchasing power through physical assets held outside the traditional banking system, rather than short-term transactions. U.S.-China relations continue to shape global economic dynamics. While the recent tariff reduction demonstrates short-term cooperation, outstanding issues such as semiconductor policy, Taiwan, and the global role of the U.S. dollar continue to weigh on long-term investor confidence. According to Lynette Zang, silver and gold not only make you rich, but will also save you. Before we move forward, if you want to stay updated with gold and silver news, you can subscribe to our channel and like this video. Now, let's get back to Lynette Zang's view on gold and silver and the world economy.
Gold, that is the primary currency metal that is all intrinsic value, since it is used in every single sector of the global economy. That's why it can't be inflated away. And they take this garbage and that has no intrinsic value. It's used in one place and it doesn't even cost anything to create. And they revalue gold against that. And that is when gold begins to go to its true fundamental value. My mantra is that you need to have surety in food, water, energy, security, barterability, which for me is primarily silver, wealth preservation, which for me is primarily gold. You need to be surrounded by community that brings in all the different skills and tools that they have. You come together so that there's power in numbers, and then there's that shelter piece that we're talking about. If, however, you're speculating, then real estate is a horrendous place to be, because even if you have the house paid off, you're always going to have to pay those property taxes. Got to get redeemable gold back in the monetary system again, because redeemable means if I don't like what the politicians are doing, I can say, okay, give me my gold. And what gold does inside of a monetary system, it forces fiscal responsibility. But like we've seen with Zimbabwe, who created the Zim gold, it was not physical or redeemable. And they started the Zim gold in April and they revalued it 44% in October. If it was redeemable, they could not do that. So it was just, if it's not redeemable, it doesn't mean anything, nothing. I think the world knows that the U.S. is not the superpower that it once was, but let's take that maybe one step further, because what I hope people learned when they saw that food, the security, the social security net removed from people, I think people have lost a lot of confidence in the government. And that's, it's not just the US dollar as the world reserve currency, it's also that public confidence in the Ponzi scheme.
The recent signed Genius Act is a deliberate plan to trigger hyperinflation using stablecoins as the primary instrument, according to Lynette Zang. She claims the law is a core component of a future global financial reset. When President Trump signed the Genius Act, He transformed the global monetary system, Zhang stated. He has no doubt that stablecoins will be the mechanism that triggers and generates the hyperinflation necessary for the final transition to the new system. Zhang's warning comes amid mixed economic signals. While markets rallied last week, following the Federal Reserve's shift to a more conciliatory stance on the Jackson Hole Symposium, consumer credit card defaults are rising at a record pace. Zhang argues that the public is being deliberately misled by official statistics as part of the end-of-life plan for the currency. The mechanism behind this hyperinflation, she argues, is a deflationary shock triggered by the mass adoption of stablecoins issued by companies under the new law. As the public uses its traditional bank deposits to buy stablecoins, this money is withdrawn from the commercial banking system. Therefore, banks have less money to lend to the economy. Her primary concern is the U.S. Treasury bond market, which she describes as a base of global markets. In this context, she asserts that the only truly safe haven lies in physical precious metals. If you don't hold it, you don't own it. She called the official price of paper gold a joke and said she was absolutely certain that governments would attempt coordinated global action to seize gold during the next major crisis. Personally, she doesn't own any stocks, bonds, ETFs, mutual funds, annuities, or any of these fiat currency investments, Zhang said, because she is absolutely convinced that we have reached the end of this currency's life cycle. The global monetary system is undergoing a profound transformation, and gold and silver are emerging as essential tools for preserving wealth during this transition, protecting them from the collapse of monetary systems and the emergence of alternatives. Historically, all fiat monetary systems have eventually collapsed. Zhang illustrates this principle with his collection of extinct currencies, notably the Zimbabwean dollar, whose hyperinflation reached such levels that $10 trillion notes became commonplace before its complete abandonment. The current monetary system requires a continuous creation of money to avoid collapse, generating an unsustainable expansion cycle. Gold retains its purchasing power over time, while fiat currencies inexorably lose value. Since the definitive break between the dollar and gold in 1971, gold's purchasing power has increased by more than 13,000%, far exceeding the 2,600% increase recorded by the U.S. Bureau of Labor Statistics for the basic food basket. The Bank of International Settlements classifies gold as the only financial asset with no counterparty risk, recognizing its unique position within the global financial system, an asset that does not simultaneously constitute a debt to others. Silver primarily serves as a medium of exchange, and its more accessible price allows the average citizen to accumulate significant purchasing power. At a price of between $25 and $30 per ounce, silver remains affordable for most households. Gold and silver remain indispensable bulwarks against monetary collapse, guaranteeing stability in the face of fiat currency volatility. As central banks and governments grapple with unsustainable debt and excessive monetary expansion, precious metals provide a vital link between crisis and emerging economies.